August 31. This is an audio update of what's coming up in our weekly update that we're processing right now for the New York soft market, sugar, coffee, cocoa, and cotton. And it is 9:23 a.m. Eastern Time. I'm going to leave this as a free update. We are issuing level 3 alerts for a downswing in the next week for sugar, probably coffee, and perhaps cocoa. We're unsure on cotton. Now, we also have to issue an alert in sugar and coffee, that there can be more important, like level 2, level 1 trend tops, and we're going to explain that. We're going to explain various scenarios, breakdown levels that might increase downside potential, and various objectives. So that's why you want to check out the weekly update, which will be locked up. It's part of the premium service. If you're not a subscriber and interested in those markets, take a look at that, because you can basically get a free trial. Now, the next thing we want to talk about is that the cotton market, we want to watch the lows of the last couple of weeks there. Otherwise, the trend is up. Open interest is rather supportive, suggesting net new demand, but we're also monitoring signs for a level 1 critical point, a reversal point there. Overall, our thoughts on these markets is that sugar's an old bull market. It ought to be bullish into next year. I personally have a position on using just an ETF instead of the futures. It's been quite profitable. Wished I actually had futures where I would have used the margin on it and been even more profitable. At any rate, I'm wondering, from a money management perspective, is this market getting old enough that maybe going into the end of the year is it time to leave and go look for another market, even though it's going higher? And I don't know, but the model is bullish sugar in the next year, but it's also bearish next year for a minor long-term downturn in sugar. So we may be getting up to where we can find full valuations or even overvalue kind of scenarios for sugar. Coffee could certainly wake up going into next year just because of the crop damage in Brazil, which at least for some regions is extreme. But where are we going, the overall balance here? Okay, I'm not so sure how much I trust that scenario, but we'll discuss that in this weekly update. Okay. And then in the cocoa market, I believe it deserves to show a little bit more strength from seasonal demand for year-end holidays. Yet we've shown you some of the complications and what might go wrong for the bulls in those markets. These markets fit nicely in our overall scenario. Or let me finish with cotton. I still think we'll see a long-term bearish scenario on cotton next year. The problem is, can it start now, or is this thing going to be bullish right into the crux of harvest, the main thrust, and then maybe they give us a little seasonal setback? How well will the demand side work going into next year or two? Because I don't doubt over a couple of years we could still see higher cotton prices, but it just seems like there ought to be at least a brief downturn into a minor long-term bottom next year. In general, commodities should be rolling over and be lower next year. That's going to ease back the inflation. We're seeing evidence of this working. I think we've got tops in some of the energy markets. We're seeing it in agriculture. The big rush here on this pro-inflation stuff and this rebound, this dramatic record-breaking rebound of our economy after the virus pandemic recession. It just seems like it's time to calm it down. Not saying we won't see higher commodity prices in the next few years, because I'm looking for a crop problem, at least for the grains, and that's a cyclical one. I think there can be problems in the rest of the world, but again, maybe more of grains. But that doesn't mean these New York soft markets won't find an impact as well, or at least have some sympathetic trade. So lots of exciting trading to go on next few years. But right now, I think it's time to not be so bulled up off of this inflation story. We've got to get back to the microeconomics of what's going on in these individual commodities. Past results are not necessarily indicative of future results. If you're not yet a subscriber, go to criticalpointpod.com and you'll find my bio, some explanation, some instruction, information. You'll find some free opinions of the very long-term picture of our economy, stock market. You'll find a link to go to our podcast site, which is at criticalpoint.podbean.com. and you're probably already on it now if you're listening to this or you went there. But anyways, that's where we line up just a list of podcasts. We don't complicate the site. All it is just a list of free and premium service paid for audio and video podcasts. And you want to see the video so you can see how well this modeling works, as it pretty much explains all price fluctuation or close to it. Doesn't mean we can time them all right, but it's amazing how well it works, the labeling, all these fluctuations, is supply and demand that's coming from a multitude of groups that actually are pretty much controlling the market. Fascinating structure here. We get into habitual and routine task versus this creative surprise news event type of trading. We think that's a better way of looking at supply and demand. We think the fundamentals of news only explains half of price fluctuation. You need the other half. You need the other half of the story. I got it. Take a chance. Sign up. Cancel within less than 2 weeks, and you basically got about a 2-week free trial, because the billing doesn't start to 2 weeks after you begin. All right, have a great day, great week. Stay safe, stay healthy, and thank you for your time and consideration.